Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, September 24th, 2025, and here is everything you need to know as the markets open for today. US markets pulled back overnight after a strong run earlier this week. The Dow Jones Industrial Average slipped by nearly 90 points, ending at 46,292. The S&P 500 closed down roughly 0.6%, while the Nasdaq led declines with a near 1% fall, snapping its record-setting win streak. The main driver, Fed Chair Jerome Powell, signaled the central bank will be ultra-cautious after its rate cut last week, cautioning that equity valuations remain fairly high and that inflation risks aren't off the table yet. Traders are now bracing for the upcoming Friday release of the Fed's preferred inflation measure. On the corporate front, tech stocks that powered Monday's rally turned into laggards. Nvidia, Amazon and Oracle all saw sharp losses, and the broader AI rally took a breather. Apple and United Health, however, were bright spots among Dow constituents. In after-hours news, all eyes are on Micron Technology's earnings, which are seen as a key test for AI sector momentum. Turning to Indian ADRs listed in the US, performance was mixed overnight. Infosys slid more than 1.5%, and HDFC Bank shed about 1%, while ICICI Bank eased just over 1% in New York's trade. The downbeat mood in IT ADRs may reflect broader global tech sentiment, potentially translating to a softer start for Indian IT heavyweights today. For local investors, watch for sentiment cues in the banking pack and tech majors as the session unfolds. This morning, Asian markets are showing resilient gains. Japan's Nikkei has opened higher by nearly 1%, climbing above the 38,000 mark and showing confidence after China announced multiple stimulus measures. The Hang Seng index is up over 3%, outperforming the region amid Chinese central bank moves to support liquidity, while Shanghai's benchmark is posting solid gains close to 4%. These developments increase optimism in the region, especially for sectors leveraged to Chinese consumption. Gift Nifty is indicating a flat to slightly positive open for Indian equities, with early quotes around 24,700. Signaling Dalal Street may see range-bound action with a positive undertone at the open. A couple of global headlines may shape sentiment. President Donald Trump addressed the United Nations overnight and called off a crucial congressional meeting as the US nears a government shutdown deadline, adding a touch of fiscal uncertainty. Meanwhile, central banks across Asia and Australia held their rates steady, reflecting a wait-and-watch approach. Commodity markets are also on alert, with Brent crude nudging higher on supply concerns. In macro news, China's targeted easing is being closely watched by emerging markets for potential capital flow implications, while markets await the upcoming US inflation print for further direction. Domestically, the market remains resilient despite persistent foreign institutional outflows. FIIs have pulled out over 10,000 crore rupees so far this month, but local domestic flows continue to lend support. Traders are also eyeing fresh SEBI guidelines on derivatives and options, with stricter open interest calculations and new market-wide position limits effective from October. For Nifty 50, immediate support is pegged in the 25,100 range, while intraday resistance sits at 25,500 to 25,600. For Bank Nifty, watch 55,100 as the first line of defense and 55,600 as the immediate resistance. Option data and the put-call ratio suggest today could see range-bound moves unless a big trigger emerges. A decisive break above these upper bands might ignite sharp momentum, while breakdowns on the lower end may spark tactical caution. Commodities are steady, but crude oil prices are ticking up on tightening supply concerns, now holding above $67 per barrel. Gold is firmness, trading in the 3,760 zone per ounce, and silver is marginally higher as well. Base metals like copper are mostly flat, reflecting a wait-and-watch mode ahead of global data releases. All eyes remain on oil, where any fresh surge could impact Indian equities, especially oil-dependent sectors. Here's the tactical tip for the day. With volatility elevated, but the broader trend still intact, this could be an opportunity to selectively accumulate large-cap names on dips, especially in sectors like autos and banks that show resilience. Short-term traders should remain nimble, watching the 25,100 mark on Nifty for defenses. If that holds, expect ranged moves with a slight upside bias. Keep stop losses tight and avoid overcommitting until a clear directional break is seen. That's all for this morning. Stay tuned for the evening wrap, and don't forget to send in your questions or trading stories. We'll catch up with all the closing action and what it could mean for the rest of the week. Have a profitable day ahead. you.